everybody has their own opinion on like what he's actually trying to do, right? Some people are like, they're tanking the market on purpose to get the debt yield down. Can you speak on this theory? I think Besant has been in a few interviews talking about it.
Yeah. So what are they talking about? So here's the thing. America owes people a lot of money. Okay. We owe, oh my gosh, I want to say maybe $35 trillion to other people. Now, it's important to understand who are those other people and why did that happen?
Yeah.
So let's just say the five of us are running America. We all go off into our own separate rooms and, we come back with a plan. And Andrew, you're like, I want to spend $1 billion on defense. And then, Mark says, I want to spend $1 billion on healthcare. And I say, I want to spend, $2 billion on Social Security or whatever. And we tally it all up, right? And we're like, okay, to run America is going to cost $10 billion. How are we going to get that money? And, ever since like 1913,
it's a GoFundMe.
The answer is we're going to go to all the individuals in the United States to pay for it. By the way, just so you guys know, before 1913, okay, we had 120 odd years where all of that money, that $10 billion, whatever that number was at the time, it was all generated via tariffs. Okay, it was outside folks paying in to have the right to be in the United States. Then we would take that money and we would pay for healthcare, we would pay for Social Security, we would pay for military, we did all that stuff. Okay, so anyways, fine. So here we are. But you add up all the amount of taxes we raise, and it only is $8 billion. So what do? You go and you borrow from somebody who's willing to lend you $2 billion, right? So
just to clarify, like that borrowing doesn't necessarily mean a bank. People can buy bonds. They can buy these Treasury bonds. And isn't that a similar thing?
So what happens is, okay, we're like, okay, shit, we need to come up with $2 billion. Where do we get it? So what happens is the United States Treasury is allowed by law to then go into the market. Okay, I'll explain what that means in a second. And sell an IOU. Mm-hmm. Hey, this IOU is backed by the United States government, full faith and fidelity of all of the assets that we own. Give me $2 billion. I'm going to take it. I'm going to fund this deficit and I'm going to spend my $10 billion this year. We've been doing that basically forever. Add it all up now, we're at 30 some odd trillion dollars. Okay. Now, what is the problem with that? Well, that is a colossal interest rate payment. Imagine that you take out now a credit card every year, max it out. At some point, you're going to have an enormous interest payment, right? And that is dictated by the interest rate that is tied to the credit card that you have. It's the exact same thing for the United States government. We have 30 some odd trillion of debt, and we have a really high APR.
Yeah, the APR is what right now?
Well, I think the blended is, I want to say like 5-6%, let's say. So, you're talking trillions of dollars in interest, okay? Which is a problem. So on top of that, these credit cards, assuming you have this credit card, it expires and you got to go and apply for a new one. Mm-hmm. That's what every year. So right now in this year, America has $6 trillion of credit that is expiring that we don't have the money to pay for. So what do we need to do? We need to reborrow that money.
So issue more bonds.
So we have to sell bonds. So who are the buyers? The buyers are all these people around the world, central banks, pension plans.
Also us.
Yeah.
Yes, but asterisks. The thing that America is, again, I go back to, like, we are the star of the show, okay? Everybody is levered to the United States. Everybody. What does that mean? If you go to Japan is way deeper in debt than we are. They have 2 times as much debt as we do relative to our GDP, relative to the amount of revenue that we make. And you would say, well, how's that possible? When Japan finances their debt, the overwhelming majority of the people that are supporting Japan are the Japanese. Japanese companies, Japanese pension funds, Japanese individuals, your mom, your dad, buying the Japanese bonds. In America, it's not that. It's about a third are Americans, but 2/3 are everywhere. Okay, it's like the Saudi Aramco, it's Shell, it's Novartis, it's the
China.
Central Bank of Lesotho, it's China. China owns almost $1 trillion of our debt. So the whole point is, if you can bring the cost of borrowing down, we save ourselves a lot of money. We make the headache much smaller. Now, here's a huge problem that happened at the end of Biden.
Real quick, before you say that. So essentially, if we can lower the
APR,
if we can lower the interest payment, then at the end of every year, the money that we owe is much less, and then we can start chipping away at the principal instead of just paying the interest.
There you go.
Another important thing to understand is the more people buy treasuries, the lower the interest payment is on those treasuries. The less people that are buying treasuries, the higher it goes. Right?
Exactly. This is like this.
So if you can, some people will say, if you can scare people in the equities market, meaning just the stocks, right? If you can scare them about stocks, if you can create uncertainty in the stock market,
then they go buy treasuries.
People go, I just need some security. I need something backed with the full, support and fidelity of the U.S. government. I need treasuries. They start dumping all that money into treasuries. You can reduce that yield, which is that interest payment. Now, before you move on, I just want to ask one question. We initially, when this was mentioned, I guess a couple of days ago by Trump, you saw that yield go down almost like a point, right? Or at least it clipped.
It was enormous. We went from like 450. Like, I was worried that it could go to 5. Instead, when Trump said, guys, I'm doing this, I'm serious, it went from 450 to like 420. And then it went to 4. And then it went to like 3. 90 something, and now it's right around back at 4.
Now, when it started to go back up again, some people thought that a big holder of U.S. treasuries, i.e. like a China or one of the other countries or companies they were talking about, purposely sold treasuries
to flood the treasury market,
and then increase that the yield, that interest payment again. Remember, the more that they sell, the more we got to pay out. So it's a form of eco-terrorism.
Is
that bullshit or true?
I think it's bullshit, and I'll tell you why. There is no amount of money that you could spend that a country has in U.S. treasuries to sustain that kind of price manipulation in a market that big.
Got it. So it might be initial, but eventually it would start to...
Could you puke it out? Like, meaning the thing is, like...
Got it.
These markets are extremely efficient. Like, in betting, like sports betting, I used to be a big sports bettor. Like, these guys are all sharps, okay?
Yeah.
They know the line.
They know the edge.
You're not getting an advantage over one day, over 5 hours. Like, that's...
Got it. So it would be China literally unloading the $1 trillion in bonds that they have.
They wouldn't do that.
And they wouldn't do it. Of course, there's probably some sort of like competitive advantage they have owning that type of debt.
The thing with Biden, just so you guys know, is, this is a misnomer that, Trump is, for the wealthy. I don't think that that's true. Trump is much more about MAGA, which is like working class, middle class. He's not about the Mag 7. That's what Besson said too. The stock market is a Mag 7, Magnificent 7 problem, not a MAGA problem. What does he mean by that? Yeah. What he means is like 50% of Americans have zero equity exposure. Zero.
This is what we talked about when I did your pod. And this was huge. Yeah.
And so, and 44% of it own like 12%. So for the most part, the American individual investor is not necessarily super exposed to equities. And so the thing that Biden did, though, is he had an incredibly aggressive program of keeping the stock market afloat. How do you do that? Okay, so like if you guys and I wanted to manipulate the stock market at the president of the United States, what could we do?
Keep money cheap.
You would keep money cheap. You would...
Which means, just for everybody, like making sure the cost of taking out money, like interest rates are low.
Yeah.
You could...
Interest rates were high during Biden.
They were high, but what Janet Yellen did was as the interest rates came due in that period, they massively just refinanced the debt. And this is getting a little technical, but in very short periods of time. So when you go and refinance yourself, right? Like if you go and refinance your home, you could do a 10-year mortgage, you could do a 30-year mortgage. She did a 30-day to 1-year mortgage. Okay. Now, why would you do that? If it was cheaper, right? And you basically had more flexibility to just keep money in the system. If you had, all these $2 billion loans going out to all of your friends who would just like spend in all kinds of crazy ways, everything looks like it's working. GDP looks like it's working. The stock market goes up because the earnings of these companies looks like it's working. And what's incredible is that problem is now coming home to roost now. So Besant has to refinance $6 trillion in the next 9 months.
Oof.
Okay, so this is like not a small number, right? So all this debt that basically Yellen and Biden just kind of put on the front end, it's called the front end of the curve, like these 1-year maturities or whatever, they got to figure out how to push it out 10 years, 12 years, as far as possible. And so that's going to be a very complicated task. And so they benefit from the lower interest rate. And to your point, what tariffs did was it shocked the stock market. And when that happened, it told the bond market, hey, man, there's a lot of volatility and uncertainty here. It's like, let's go to the sidelines for a little bit and just chill and observe what happens. When that happens, the interest rates go down. And that allows us, Americans, all of us collectively, we will save hundreds and hundreds of billions of dollars because of what has happened in the last 5 days.
So, yeah, now maybe this will correct itself quickly, but if you can give me a steel man, I largely agree anecdotally with what you're saying. Again, we travel the country, I see middle America and I see why they're angry. I see like a lot of decay, and you can tell me the stock market is high, but I'm like, I don't think ordinary Americans feel this. So give me the steel man argument for why a stock market dip that doesn't scare me for regular Americans would be a big problem and whatever.
It is a big problem for people that are about to retire. It's a big problem for people that have a large percentage of their net worth there. Mm-hmm. It's also a big problem for the companies themselves because if shareholders have a bunch of uncertainty, they may not give them more money. These companies may not be able to invest as aggressively in the future. So it's not like it's not without pain. I want to be clear, like you're right, like there's no free lunch anymore. You know what I mean? Mm-hmm. Like this is like big boy pants time. So we all put on our fucking big boy pants, and the reality is there is going to be these trade-offs. The question is, how can you judge the trade-offs and make a very difficult set of decisions for the greater good? And I think that's honestly where we're at. So yeah, there will be pain for some of these companies. Is it right? I'm not going to call that ball and strike. It's unfortunate. And the reason we're here is not necessarily anybody's fault that's in this room. But you got to fix it. Sorry, go ahead.
If the majority of Americans are living check to check, isn't this going to hurt them way more than it hurts everyone else?
Right. It's inflationary is what you'd say, right?
So so this is also another misnomer. Okay. And I think this is important. What is inflation? Okay. Inflation means, if you said inflation is, I'll pick a number, 3%. What does that mean? That means that if you and I bought those Jordans and they were $100, next year, let's just use that for the purposes of this math, are 103, right? They go up by 3%. Actually, let's use 10% because I'm bad at 3% math here. So it's $100, it goes to 110, okay? The next year, it goes up by another 10% if inflation stays where it is, right? Now you added $11, right? So now the shoes are 121. So in 2 years, the price has gone from 100 to 121 for those Jordans, right? That's inflation. The next year, it'll go up by another 10%. The next year, it'll go up by 10%. That's what inflation is. This is a price shock. And that's different. What do I mean? So if that Jordan has a 10% tariff on it, it goes from 100 to 110 one time. And if inflation is otherwise zero or close to zero, it doesn't go up the next year by another $10 and then another $10 and another $10. That's not how tariffs work. It is how inflation works. So I think it's important to just make sure, like, are tariffs inflationary? They can be, but not necessarily.
But if we import most of our products and we're applying tariffs to almost all the product we import, then that's going to be a huge price increase for pretty much all the goods that we buy.
But it's not correlated to the cost of the actual goods sold. Like, the reason inflation happens is, the price of oil goes up, so it's more expensive to run the factory. So then the goods become, nothing changed to make your shoe. Nothing. It's just that when it landed in the port of LA, there used to be a piece of paper that you would stamp that said 0%. Now the thing is stamped and it says 10%. The actual cost of making this thing has not gone up.
Yeah, but Nike's going to
Pass
apply
that
that
cost on.
pass the cost
he's not
to the
saying
consumer.
he's not saying that the cost doesn't get passed on. So let's say
But it's a one-time pass-through.
So let's say in the first year,
gonna hurt tremendously.
Yeah. Nobody's saying it won't hurt, but why it's different than inflation. So in the first year, it would feel identical to inflation. In the second year, it would stay the same. Whereas in the second year with inflation, it would continue at that rate.
Yeah, and I guess what I'm saying is I'm just concerned about the people who are barely getting by, and now
1,000.
food's going to be more expensive.
No,
Everything's gonna be more
1,000%.
like-
But here's what they said, which is, I think you want to see this happen. What they said is there's going to be these price shocks. You're right. So year one is difficult, okay? But it could raise upwards of $750 billion a year, okay?
You're saying tariffs.
Tariffs. What they said that they would do is they would then turn around and cut the federal
Income tax.
income tax for anybody making $150,000 or less to zero.
So what they're doing is using the tariffs to offset the price shock.
I didn't know that.
Yeah, I didn't.
But and this is the math, and that hasn't been 100% established yet. But instead of like putting the burden on the American consumer, we put the burden on the foreign country to pay that delta.
And then effectively subsidize the consumer through an income tax.
To be fair, the
Exactly.
$750 billion, I assume, that's assuming everybody pays the tariff fully. Which I
Okay,
don't know
so
if that's actually
this
gonna
is
happen.
so this is an important point. I would say right now it's a moving target, meaning the sharps before Liberation Day, the smart money line was at like 250 billion. Okay. That's Wall Street. I mean, we'll put smart in quotes, but that was their number. And part of why the stock market went berserk was they just got it totally wrong. And the back of the envelope math that I did and that a couple of my friends did, and I would say they're much smarter than I am, they got to 750. I got to 750 as well. Howard Lutnick, who's a commerce secretary, said, like, anywhere approaching 750, we have a line of sight to be able to cut income taxes to zero for anybody making 150 or less.
Oof.
Yeah, that'd be great.
I mean,
So we're in the magic zone here, guys.
So here's
you
the
know
thing.
what I mean?
So there's a perfect example. Like, there's all this conversation about the midterms right now. Trump tanks the stock market. People get screwed over by what some people calling inflation, but like the price shock. But if you announce at the end of the year, there's a $750 billion surplus because of taxes, and we're eradicating income tax for people making under $150,000, midterms are going red.
I mean, bro, forget midterms. They'll want Trump for the third term.
I mean,
you know what I mean?
But would there be a surplus if we're in so much debt? Isn't it just chipping away at the debt? It won't be a
So
surplus.
I guess it's you use the debt.
Year to date.
It's up to you how you use that $750 billion. And I assume in the first year to deal with the price shock, I don't want to speak for you, Chamath, but it would be like, okay, this year, that goes back to y'all. We'll figure that out. Deal with the price shock. Now that everything is normalized and inflation is down, we'll start using that $750 billion toward the debt. I
No,
assume.
but if you get rid of federal taxes, then you have to keep applying that money to offset.
Yes, you would, 100%. But would it not sway voters?
Oh yeah, but that's not.
Let's say you
worried about.
halved.
Worried about.
Let's say you halved income tax. Right now, we're talking about none. But like, let's say you halved it. Hey, your income tax is going to be 50%. What if your tax guy came to you and was like, "Yo, I got a way to get your income tax down to like 50% of what you normally would pay"?
What he already does now.
No,
I get what you're saying. Is this a long-term sustainable solution?
Will this actually chip away at the debt long term? Is what Al's asking.
Yeah. How can tariffs chip away at the debt?
I think, Al, the longer term, we need growth in America. How do you really chip away at this problem? You need to make more money. So I think saving money is good, but you need to make more money. How do you make more money in America? We need to have more people working and getting paid more money. And the way to do that is we need the kinds of industries that create enough value where you're willing to pay these folks more money. So if you could go to a trade school and work for a utility and make, 80, 90, 100, whatever, 110K a year, and again, this goes back to the domestic policy that they have to get right, and be able to buy a house and send your kid to a school where they're not going to get, fucked up in the head. They can get like a good, decent education. I think that's how you generate way more value in the United States so that you can really start to chip away at it.